In 1720, something happened in England that shook the entire country. People were convinced they could get rich overnight by investing in a single company. Everywhere you went, people were saying things like, "This is a once-in-a-lifetime opportunity. This time it's different. This company is England's future." Driven by the dream of massive profits, people started pouring every penny they had into this idea. They sold their homes, invested their family's life savings, and even borrowed money just to buy more shares. And honestly, if you were there, you might have done the same, because the fear of missing out can push anyone into taking huge risks. But there's a truth we often forget. The dream of getting rich fast always hides a massive amount of danger. Today, you're about to learn how what we now call a bubble and a mass hysteria truly began 300 years ago. But remember, there was no banking tech, no AI, no crypto, nothing high-tech. Just the illusion of guaranteed profits and the belief that if everyone's making money, so should I. And maybe the most dangerous thought ever. Everyone's making money, so I should too. By 1711, England was drowning in debt. Years of war had wrecked the economy, and the markets were frozen. So what did the government do? They handed the debt over to a private company, and that's how the South Sea Company was born. Officially, the company would trade with the colonies in South America, which meant gold, silver, and unimaginable riches. People dreamed of huge profits from territories controlled by Spain. But the truth was, England's actual trade rights in the region were almost zero. Still, nobody cared, because the company had something far more valuable than trade rights: the government's signature. People thought, if the state is behind it, the risk is zero. Sound familiar? Even today, this is one of the biggest traps in finance. By the late 1710s, England's economy was struggling. High interest rates, weak investment climate. Then the South Sea Company came up with a dazzling plan. We'll take over the government's debt. In return, we'll sell shares to the public. The government loved the idea, and the company began shouting slogans like, "We're partners with the state, invest in England's future and your own." And that was enough. The stock price began to skyrocket. For the first time, people understood what it meant to make money from the stock market. Coffee houses turned into mini stock exchanges. Newspapers ran headlines like, "South Sea shares breaking records. Don't miss this train. Early investors winning big." Everyone was buying. The poor, the rich, merchants, nobles, everyone. Within a few months, the stock rose 10 times. Yes, 10 times. And that alone made people even more convinced. Human psychology runs on a simple script. If everyone's winning, why shouldn't I? This never changes. Dot-com bubble, crypto bubble, real estate bubble, all built on the same instincts. By 1720, England looked like this: tailors closing their shops to buy shares, servants investing their entire wages, families putting their wedding money into the company. And the most dangerous sentence was spreading everywhere. This time, it really is different. Whenever you hear that sentence, run, because it's never different. Meanwhile, almost no one was asking, how much does this company actually earn? Where's the real profit? How long can this go on? Because here's the truth. The company earned almost nothing. It was selling pure expectation. And behind the scenes, it was secretly manipulating its own stock price, buying back its own shares to keep the hype alive. Today, this would be a criminal offense. But in 1720, well, everyone was making money, so nobody complained. Every bubble eventually burst. The first warning came when another European company collapsed. Investors panicked. South Sea shares dipped. And suddenly, everyone had the same reaction. Sell, sell, sell. The switch flipped overnight. Yesterday, they expected unlimited growth. Today, they were desperate for an exit. And then, it crashed. Within weeks, the stock imploded. Thousands were wiped out. Homes, savings, dreams, gone. One member of parliament committed suicide. They even tried to remove Prime Minister Robert Walpole from office. People close to the king were ruined. England was forced to declare one of the biggest economic scandals in its history. The South Sea bubble happened 300 years ago. but its lessons are eternal. People blindly trust anything that looks state-backed. Selling expectations can be more profitable than selling a real product. Not everyone can get rich at the same time. And most importantly, psychology drives the economy. Think of Bitcoin manias, real estate bubbles, meme stocks, get-rich-fast projects. They all start with the same phrase. This time, it's different. But the ending is always the same. The South Sea bubble teaches us one thing. Economic crises aren't just about numbers. They're about human behavior. And from then until now, history has repeated itself countless times. Sure, some people win, but thousands always lose.